How to use money in 2026 before the system changes.
For most of history, money worked in a simple way. You earned it, you saved it, you waited. That formula worked for decades. It was the old map that everyone followed. But as we move through 2026, that map doesn't match the terrain anymore. The system isn't changing with a loud bang or a sudden crash. It's changing quietly in the background, like a software update you didn't ask for. Prices feel unstable, jobs feel uncertain, money feels weaker every year. And the scary part? Most people are still using money like it's 2015. Today's video is not about getting rich quick, it's about not falling behind, because in 2026, using money the old way is one of the fastest ways to lose it. So let's explain how to use money in 2026 before the system changes for good.
Why 2026 is different from before. 2026 isn't special because of one single event. It's different because of many small shifts happening all at once. Think of it like a weather system. One cloud is fine, but when the wind, humidity, and temperature all shift together, you get a storm. Inflation hasn't disappeared. It has simply become the new baseline. Interest rates are higher than our generation is used to. Technology isn't just a tool anymore. It is actively replacing routine jobs that used to be safe. Meanwhile, governments are deeper in debt than ever before, which limits their ability to fix things when they break. In the past, money rewarded patience. You could put it in a drawer and it would be fine. Today, money rewards awareness. Saving without a plan slowly loses value. Depending on one single income stream feels like walking a tightrope without a net. Ignoring new skills has become an expensive mistake. The system isn't broken, it's evolving. And whenever systems evolve, the people who adapt early stay safe. People who don't, they struggle quietly. 2026 is about adjustment, not collapse. Understanding that difference is your first step toward safety.
Why just saving is no longer enough. Saving money sounds responsible. It's what our parents taught us. And don't get me wrong, having a cushion still matters. But in 2026, just saving is no longer a shield. It's actually a leak. Why? Because inflation quietly eats your savings from the inside out. Your money doesn't physically disappear from your account. It just buys less every time you go to the store. Think of your savings like a block of ice. If you leave it out in the sun, it slowly melts. If you don't move it to the freezer or turn it into something else, eventually you're just left with a puddle. In 2026, we have to view money differently. Emergency savings are essential for survival. Long-term idle savings are a risk to your future. Money needs a purpose. Short-term money should protect you from surprises, but long-term money needs to work. Keeping all your wealth frozen in one spot is no longer the safe move. The goal isn't to take wild risks. The goal is movement with intention. If your money is standing still, it's falling behind.
How to spend money smartly in 2026. In 2026, smart spending matters more than having a high income. You can earn a fortune, but if your burn rate is too high, you're still fragile. Expenses are currently rising faster than most salaries can keep up with. The key rule for 2026 is simple. Spend on things that reduce your future costs. Most people spend for comfort today. They buy things that lose value the moment they leave the store. But smart spending is about buying relief for tomorrow. Spending on health now prevents massive hospital bills later. Spending on better tools saves you hours of time every week. Spending on skills makes you more valuable in a crowded market. Every time you open your wallet, you should ask one question. Will this make my future life easier or harder? Bad spending gives you a dopamine hit today, but leaves you with a bill tomorrow. Good spending acts like a seed. People who survive system changes don't necessarily spend less. They spend intentionally. In uncertain times, knowing where your money goes is a superpower. How to think about debt in 2026. Debt is like fire. It can cook your food or it can burn your house down. In 2026, debt is becoming much more dangerous for those who don't respect it. High-interest debt, like credit cards or buy now, pay later schemes, is a trap designed to keep you in the old system. When interest rates stay high and unpredictable, that debt becomes heavier every single month. It's like trying to swim with an anchor tied to your ankle. The difference in 2026 is clear. Bad debt consumes your future income to pay for your past. Good debt, used rarely, improves your future income or long-term stability. Impulse loans and lifestyle EMIs are the biggest threats to your freedom. In a changing system, freedom matters more than appearance. If you owe money to everyone, you can't pivot when a new opportunity arrives. You are stuck. Less debt equals more choices, and in 2026, having the power to choose your next move is the ultimate form of wealth. Why skills are the new savings account? Money used to come primarily from your job title. Now it comes from your skills. Cash loses value, markets crash, buildings age, but skills? Skills adapt. In 2026, the safest investment you can make isn't a stock or a coin. It's learning how to stay useful in a world that is changing its mind every 6 months. Think of your skills as a living savings account. Unlike a bank account, no one can tax your knowledge, and inflation doesn't make your ability to solve problems worth less. Skills create 3 things that cash alone cannot: flexibility, the ability to switch industries if you are shrinks; side income, the ability to make money outside of a 9-to-5; and negotiation power. The more rare your skill, the more you dictate the terms. Even one extra skill, like understanding AI tools, basic coding, or high-level communication, can act as an insurance policy. You don't need to be a psychic who predicts the future. You just need to be someone who's ready to handle whatever the future looks like.
Why diversity matters more than returns. Most people spend all their energy chasing the highest return. They want the biggest win. But smart people in 2026 focus on survival first. The world is becoming more fragile. Relying on one of anything is a gamble. One job, one industry, one bank, one country. If that one thing has a bad year, you have a bad life. Diversification isn't about having a complex 50-page financial plan. It's just about balance. It's about building a financial ecosystem instead of a financial pillar. This means having multiple paths for income, even if some are small. It means having different types of savings, some liquid, some invested, some physical. It means being anti-fragile. A strong system doesn't just survive a shock, it is built to withstand it because it isn't dependent on everything going perfectly. Your personal finances should work the same way. Don't look for the best investment, look for the sturdiest combination. 2026 is not about fear. It's about using money consciously. The system isn't ending, it's just moving into a new phase. And history shows that money always rewards the people who change with the system, rather than fighting to keep things the way they used to be. You don't need to be a millionaire. You don't need to be an expert in macroeconomics. You don't even need perfect timing. You just need awareness. Because in every major system shift, the biggest losses don't happen to the people who took risks. They happen to the people who assumed that nothing would ever change. The old map is gone. It's time to start drawing a new one. Use your money like the future matters, because it does.